The Reserve Bank of Zimbabwe says it has injected a total of 64 million United States dollars into the market this month alone to address growing demand for foreign currency. This follows an earlier injection of 50 million United States dollars in July, with foreign currency receipts up by 13.4% compared to 2023. The RBZ has ensured timely foreign payments and ongoing economic activity. We are now joined live by Eben Mabunda to unpack this latest development. Good evening, Eben. Tell us, what does this mean for the ordinary person out there?
Well, good evening. This has been an intervention that is aimed at bringing efficiency on the formal market where foreign exchange is concerned. Importers have been highlighting that there have been foreign currency shortages on the formal market, it being the manifestation of a scenario where you've got more companies that are demanding foreign currency on the formal market than you have companies that are actually disposing of their foreign currency for the domestic currency on the formal market. And so that mismatch there has created that very huge gap. And so the interventions by the central bank, which according to the statement is coming to about 114 million US dollars since July up to date, have been meant to address that supply gap where that market is actually concerned. There remains a very strong demand for foreign currency as importers need the greenback, of course, to be able to carry out their transactions and get the raw materials, get some of their stocks from beyond Zimbabwe's borders, and several other needs that need to be met, as well as also some degree of hedging tendencies against some potential issues or perceived threats that may have been anticipated by business players going into the future.
All right. What other options are available for authorities to address the currency situation?
Well, it's not as simple as ABC. There would be several matters to look into. I think the first one would be to address the parallel market premiums, which are now flying at about 80%, 1:14 vis-a-vis 1:26 on the black market. So that gap there needs to be closed to a safe range of between 20 to 30%, because as it stands, that remains a concern. Speculation remains rife in the economy. Arbitrage activities would continue to thrive. And so at this particular point, there would be need to actually close that particular gap and perhaps implement a managed float system. There is an ongoing debate within the business quarters either to float the exchange rate or to employ a managed float system, because as it stands, it seems apparent that the central bank is keeping a tight leash on the formal market rate, of which there would be need to manage that float, to employ a managed float system. I would put it to somewhat bring some degree of efficiency where the market is concerned. But also it would be important to increase the demand for the domestic currency in one way or the other. Passports are still denominated in US dollars, rentals are still denominated in US dollars, fuel is still denominated in US dollars. So for as long as there is that increased demand for the greenback, it remains very much of a challenge where the forex market of the country is concerned, as well as also in the medium term there would be need to increase production within the economy, because there remains a huge appetite on the part of local businesses to import some of the stock and some of the raw materials useful in production in Zimbabwe.
As you know, foreign currency receipts went up by 13.4% compared to 2023. Why is this important?
Well, the biggest contributor there would be gold. We have seen gold prices surge since the start of the year. We are looking at gold price of about 2,600 US dollars, of course, on the global markets, 2.5, 2.6 thereabout. And so when you look at that, you'd realize that gold is the biggest foreign currency earner for Zimbabwe, responsible for billions on an annual basis. basis. And so with the firming up of the price of gold, this has been a key determinant in why we are seeing that particular jump there, which is perhaps something that could be sustained going into the future, given the fact that geopolitical tensions exist. At the same time, we continue to see that central banks around the world have increased their demand for the yellow metal, and so that is what is sustaining that increase there. Of course, is a plus, but there remains a concern because when you look at the imports vis-a-vis the exports for the country, the exports still outweigh the imports for Zimbabwe. So there would be need to continue seeing that increase where the exports are concerned, and reduce the imports for the country so that Zimbabwe's trade position can be a firm one going into the future.
ZTN Prime, DSTV channel 294, the place to be.